This is pre-market pulse. Powered by Zench, a fast, clean read on the tone of the market before the opening bell. No hype, no noise, just the signals that matter. Here's how the market is setting up this morning.
US index futures are sharply lower this morning after President Trump offered no clear timeline to end the Iran war during an overnight address. The S&P 500 futures are at 6,370, down 1.1%. The Nasdaq futures are at 23,170, down 1.3%. The Dow futures are at 45,300, down 1.0%. This is a dramatic reversal from Wednesday's optimism. The market is now pricing in a scenario where the war continues indefinitely. Oil prices have surged. Brent crude has jumped 8.0% to $107. WTI is up 8.5% to $97.50. The geopolitical risk premium is back. Traders are now concerned that Trump's war ending signals were premature or misleading. Overnight, President Trump addressed the nation on the Iran war. Instead of announcing a ceasefire or clear timeline to end the conflict, Trump said the US would continue to monitor the situation and take action as necessary. This is a significant reversal from Wednesday's optimism. Here's what changed: no clear timeline. Trump didn't announce when the war would end. He didn't commit to a ceasefire. He left the door open for continued escalation. Ambiguous language. Trump's statement was vague and non-committal. Traders interpreted this as a sign that the war could continue indefinitely. Oil market reacted immediately. Brent crude spiked from $98.50 to $107 in overnight trading. This is the market's way of saying, "We don't believe the war is ending." The market is now repricing. If the war continues, oil could spike to $110 to $120. Inflation pressures remain elevated. The Fed stays on hold longer. Equities face headwinds. Consumer spending weakens. This is a structural shift back to the bearish scenario. For the past 2 days, the market was celebrating de-escalation. Now, it's bracing for prolonged conflict. The pre-market tone. Futures are sharply lower, and the tone is risk-off. This is a sharp reversal from Wednesday's optimism. Traders are now pricing in war continuing indefinitely, oil staying elevated, $105 to $110, Fed on hold through 2026, S&P 500 retesting correction lows, 6,300 to 6,350, and consumer sentiment deteriorating. Key dynamics. Trump's credibility is questioned. He signaled the war was ending on Wednesday. Now he's saying it could continue. Traders are losing confidence in his statements. Oil is the primary driver. At $107, oil is back to levels that pressure inflation and equities. Every 1% move in oil has outsized impact. The April 6 deadline is now critical. If Trump doesn't announce a ceasefire by April 6, the market could sell off sharply. Trade data at 8:30 a.m. Eastern Time, the most important economic data today. If trade deficit widens, expect selling. If it narrows, expect a small bounce.
What's on the calendar? 8:30 a.m. Eastern Time. U.S. International Trade in Goods and Services February. The headline number. A widening trade deficit would signal weak demand and could trigger selling. 8:30 a.m. Eastern Time. Weekly export sales. A look at U.S. agricultural exports. Weakness here could signal trade war concerns. Throughout the day, earnings continue. Watch for any guidance cuts or warnings about geopolitical impact. Overnight, watch for any Trump comments on the war or oil prices. The setup. The market is caught between two forces: bearish, Trump backtrack; oil spiking, war uncertainty. April 6 deadline approaching. Consumer sentiment weak. Equities in correction territory. Technical support breaking down. Bullish, oversold setup after yesterday's rally. Trade data could surprise. Negotiations could resume. Oil could retreat if Trump clarifies his position. The key variable is Trump's next statement. If he clarifies that the war is ending, oil could retreat, and equities could rally. If he continues to be ambiguous, expect selling. For now, the market is repricing lower. The celebration is over. The war is back to being the primary driver of volatility. The bottom line. Thursday morning brings a sharp reversal in sentiment. Trump's backtrack, oil spiking to $107, and war uncertainty are all weighing on equities. The market is repricing from de-escalation optimism to prolonged conflict concerns. The key question: is Trump's backtrack a negotiating tactic, or a sign that the war will continue indefinitely? If it's a tactic, expect a quick bounce and a return to the de-escalation narrative. If it's a sign of prolonged conflict, expect selling and a retest of correction lows. Watch Trump's next statement. Watch oil prices. Watch the trade data. This is a week where sentiment can shift dramatically on any headline. For now, the tone is risk-off. The war is back. Oil is spiking. Equities are selling off. The relief rally is over. That's the pre-market pulse for Thursday, April 2nd, 2026. Thank you, and have a great day.